What's up, traders? In this video, I will show you how to start a profitable trading day. It is important that as a trader, you start a day with a proper preparation. As you know that there is saying, morning will tell you how a day look like. So how you start your day will really impact the result you get on the trading day. So before I begin, make sure you smash the like button. This is Forex Wizard from Forex Trading Wizard Academy. Stick till the end of this video to tell you everything exactly how you can start your trading day. There will be five important tips in this video. So the first thing you can do as a trader is turn off the noises. This is very important, guys and girls, that when you start your trading day, you need to focus. Focus is the key as a trader. Most trader, I saw that in my own experience, that normally pay attention to a lot of noises. So what will happen if you don't turn off the noise? For example, let's say you found a good trade, as an example, on euro dollar. Okay, you found a good trade and you want to go short from here. You saw that, okay, there is a strong rejection from the top, from this zone. I'm gonna sell euro dollar. The trend is down, everything is in my favor, it is satisfying my strategy, so let's go short. Once you prepare, suddenly you found a message or a knock on any kind of groups or in social media that telling that euro dollar might go up, or any kind of things that will create an instant doubt in your decision. Now, I'm not saying that you should cut off yourself from all kind of social media, but what I'm saying that when you are making your trading decision, to stay focused, it is important that you turn off all kind of noises. Always keep in mind, in the market there will be always buyers and there will be always sellers, otherwise the market will not move. So let's, for example, when you this candle has been created, there was always on the other side there are some buyers. So there is this is a candle of the seller, right? The sellers were in control, but to sell this candle, there were buyers needed on the other side. And that is why there will be always different opinion than what you are doing. So if you get confused because of some noises, in most cases you might see that you are making a bad decision. So it is important that you turn off the noises and pay attention, focus on your strategy at the beginning of the day. The next tip that I can give you is create a short list in your trading. It is very important, guys and girls. Let me tell you what do I mean by create a short list. Let's say you started your trading day and your chart look like that. You see there are hundreds of pairs you can keep on your, you know that there is, it's a list. So which one you should pay attention to? You should pay attention to GJ or euro dollar or gold, or whatever, what pair you should focus on. So to reduce that noise, to reduce that list, you need to create a short list. Now how can you create that short list? It will entirely depend on your trading strategy, on your trading approach. So what do I mean by this? Let's say if you are a trend trader like I do, okay, what I do is I first look for the pairs that is giving me clear trending direction. Okay, for example, first I'll look at all of them quickly. Okay, it's Aussie dollar, CAD JPY, uh, AUD and ZD, all the pairs I'll look at one by one, all of them. So once I'll see that a pair, for example, British pound US dollar. Okay, so if I see that British pound US dollar as an example, uh, forming this candle on the 4 hour time frame, let's say this one is being formed on British pound US dollar. So I know that after closing of this candle, because this is a downtrend, the price is being rejecting from this important level of resistance, I could find a trading opportunity in that pair, and this is a highly volatile pair. I'm gonna mark it. So if you click here on trading view, you see that there is color coded depending on your subscription type. So if you press, let's say, blue or any color, you can create a short list based on the pairs, let's say British pound, US dollar, euro, JPY, whatever pairs you think that will give you. As an example, gold, GBP, JPY. So you can click all of them. That's a US 30, whatever pair you want to. So not too many. That many pairs you think that you should be trading, you can create a short list. As an example, I created a short list of these 5 pairs. So once I will click here on trading view, I'll see all this color that I have created, and if I click blue, now my list is became very short, and I can focus on all these pairs that giving me trading opportunity. For example, British pound, US dollar. Now I have a short list. I will focus on British pound, US dollar, gold, GJ, US 30, for example, as in USD CHF, and based on my strategy, I can watch these pairs until I find a trading opportunity, removing all other pairs from my focus. Because our attention is always, one way. You cannot, if you scatter your attention, ultimately you might, lose a lot of trade, okay, or you might make a bad decision. So it is important that you create a, precise short list before you make your trading decision, or before, even before you do a in-depth analysis. With that said, the next step coming is do an in-depth technical analysis. This is the third step that you can do. Once you created a short list, you see that, for example, British pound, US dollar, you found that, as an example, as we are talking about, let's replay this chart again. As I say, this candle was forming a couple of minutes remaining, this candle to close. So you can do an in-depth analysis, because you are looking at, for example, on the 4-hour time frame, and you could be making your trading decision in that time frame. But to do an in-depth analysis, first of all, that I do is I do a multi time frame analysis. So I look at a bigger picture, for example, on the monthly, to see the clear direction in the market. I see that, let's say, British pound, US dollar has created this bearish move. So this is a strong bearish price action on the monthly perspective. Then I look at weekly, I do a full analysis, trend analysis. Let's say there is a double top here, and the price came down, tested the neckline of this double top here, previous support as resistance, and we have seen a doji, and then the price was creating. This is a typical downtrending market structure. We have seen GBPUSD has broken out of this channel completely. Now this week there is a gap opening, and also we have seen GBPUSD now trying to push down. So this is how multi-time frame analysis that you see in all my analysis that I'm posting every day. Now looking at the daily as well, we see GBPUSD after the gap opening, the price went above, tested this important zone. Now we see that today the price is rejecting again here. So that's how, on the 4-hour perspective, we see that there is a, let's say, a doji is being formed. Now based on how you do your technical analysis, you can do an in-depth analysis to justify your trading decision. As you know that most trader make their trading decision based on emotion. So it is important that you do an in-depth analysis. When you see this kind of pattern, okay, that's a good trade, I have done a full analysis, now you can take the trade, okay, like that, keeping a good risk to reward. So that's how you can do an in-depth analysis. This is just a demo that I'm showing before you make your trading decision. So with that said, the fourth things that you can do is avoid doubling up the pairs. Okay, so what do I mean by this avoid doubling up the pairs is that this has happened especially in the beginning. It's very important, guys and girls, is that, let's say, for example, GBPUSD, now you took a short trade on GBPUSD. Now again, if you have a watch list that has another GBP, let's say GBPJPY, okay, now you see that GBPJPY is going up, right? It's a bullish market, strongly bullish. Now British pound, US dollar is going down, right? Now if you, let's say, sell British pound, US dollar here, okay, now if you see that the same pairs. Gbpjpy is giving you a bullish sign, right? A bullish price action. So you might say, okay, there is a good trade here, let me buy Gbpjpy. Okay, so in fact what you are doing, that you are selling Gbpjpy in one trade, and you are buying like you are selling GBP in one trade, and you are buying GBP in another trade. So what might happen in most cases, you'll see that they are correlated pairs. So you could see that you got a winning trade on GBP JPY because GBP dropped, and you might have a losing trade on GBP JPY. So British Pound US Dollar winner, GJ loser. Ultimately, you lose money. Why? Because you have to pay the spread, commission, and all other stuff. So it is important that you stay managed in your approach by avoiding the double up. Unless you are dividing the risk, it's a different thing. But what I do normally, I try to avoid pairs if I am doing not. Sometime I do, like for example, if I see a good pairs on euro, so I divide the risk. So let's say euro JPY, uh, euro dollar. Okay, now what I try to do, I try to stay in the same side. For example, I'm selling GBP in any pairs, I'll be selling GBP, and I will divide my risk 50%, like 0.5% in one pair, 0.5% in the other pair. So that's how, let's say if I sell GBP in two trades, and with 0.5% risk in one trade and 0.5% is the other trade, if I am winner, I'll be winner in both trades, and most likely, and that's good for me. If I lose, I lose in both trades. But if I do like opposite direction, in one pair if I buy and the other pair if I sell, then I might doubling up in opposite direction. So whatever happens, in most cases I might lose money. So that's how I normally try to manage when I'm doubling up the pairs, but I try to double up the pairs. So this is the fourth tips that you can do as a trader. The fifth tips to start a profitable day is to manage the risk properly. So doing the proper lot sizing. Okay, lot sizing is very very important. Okay, doing lot sizing. So I saw that in most trader, that's the normally happen, that just buy or sell randomly, let's say point one lot or point zero 0.01 lot or one lot, without doing proper risk management, guys. And it's a very very important. Why? Because when you, let's say you buy randomly, what will happen, this all this pair you see may not have the same peep value. Let's say if you buy zero point 0.1 lot on gold, and you do the same thing by zero point 0.1 lot on euro dollar, it will be a huge difference. Okay, so that's why you need to understand to do proper lot sizing. Now there is a free website. If you have a risk manager or lot size calculator for your MetaTrader Pro, that's completely fine. But if you don't have, you can use this website. This is a free website called myfxbook.com. I'm not any kind of affiliate or anything like that, just to show you. So once you go to this website, and also there is an app version available for this website, you can find on App Store, myfxbook.com. Once you go to this website, go to this forex calculator, and then go to the position size calculator, click on this one. Now you can easily in less than a minute you can calculate the lot size. For example, euro dollar, this is your pair that you are trading, your account currency, whatever, euro, GBP or USD, and then your account size. Let's say you have an account size of $2,000, and ratio, how much percentage of risk you want to take. I normally take 1%, and stop loss people, let's say in that pair, though it is not a euro dollar, but let's assume that 50 pip stop loss, or whatever stop loss pip you have, you put 25 pip as an example, and then calculate lot size. So it's saying that with that setup, with this account and lot size and pip, you need to buy zero point zero 0.08 lot on euro dollar, or sell based on which way you are trading. And that's how you can start your day with an approach to make profit from the market. I sincerely believe that this short educational video was helpful to you. If you find value in it, don't forget to smash the like button and also don't forget to hit the subscribe button. Thank you for watching. See you soon in my next video.